Hello, my name is Joris and I'm the founder of Opugrow. We need to talk about stock investments. There's a lot of turmoil nowadays in the global financial markets. Should you, as a retail investor, own stock? And if yes, which ones? For me, I could never fully answer this question. That's why I created Opugrow. It's a unique platform for stock discovery. Nobody offers similar services. I will tell you more about it in a little bit. But let's start with the first question. Should you own stock? Let's take a look at the average stock return over the last 6 years. If invested in the US stock market for the last 6 years, your $100 became $180. Or in Europe, your €100 became €130. In the same period, we've had some major market events like COVID, high inflation, coupled with a series of US bank failures in 23, and increased tariff discussions. So, although there is some occasional turmoil, owning stock for a longer period is a good strategy. But which stock or fund to buy as a retail investor? It is time to get to the bottom of that. There are many methods you can use to select your stock, but these are the most important ones. Passive index funds, active funds, traditional stock picking, and Opugrow, a unique way for stock discovery. Let's start with passive index funds, also called ETFs. This means you are putting your money in a so-called index fund. So it's tracking the overall market performance. It's easy. You just put your money in it and forget it for a while. But there's one big caveat with it. How many stocks are overvalued in that market index? Let's take a look at some recent key data. This is from a survey conducted by Bank of America. 90% of all fund managers believe that the US stock market is overvalued. And then we have the so-called Buffett indicator. This indicator compares the overall size of the economy with the value of the stock market. And the value above 120% would be seen as overvalued. Currently, we're well above 170. So, future stock returns might be lower compared to the last years. Another issue with passive investment is that there are so many index funds to choose from. How can I identify the fund with the least amount of overvalued stocks? Just alone in the US, there are over 3,500 index funds. So, passive investment is simple, but you want to have superior returns? Well, you probably need a better stock picking mechanism. The next category is active funds, also called mutual funds. This means you are giving your money to a fund manager who makes all the investment decisions. As a result, you pay a higher management fee for this service. Rather, some research has been done comparing active with passive funds. And the outcome is that passive funds in general have a higher performance. Here is research from Standard & Poor's that shows that over 80% of actively managed funds have underperformed the index when looking at a time span of 10 years. The next category is traditional stock picking. Traditional stock picking means that as a retail investor, you make your own stock selection decisions. However, where are you going to get your information from? You can use an analyst or an algorithm that scores individual stocks based on data. For instance, Morningstar puts star ratings on stocks. Or at Yahoo Finance, you can find price targets on stocks from various analysts. Or at a financial analysis website like, for instance, Guru Focus, you can find discounted cash flow valuations. You can also listen to various opinions like articles on, for instance, Motley Fool or Seeking Alpha. Or you can watch videos on YouTube from various well-known and lesser-known sources. Okay, you get the picture. Somebody or something analyzed all these stocks, but the details of these analyses are very minimal and they contradict each other. I don't know which one I should believe. So do I trust these sources? No, I don't. So this leads me to the last category, Opugrow. Opugrow is unique. Nobody offers similar services. We analyze a vast amount of financial information and deduct stock valuations and trends out of it. For that, we use the latest AI and machine learning algorithms. There are 3 things that make us unique. 1. Proof that we outperform the index. We have backtested our models with past data. Stocks that we like normally outperform the index with around 8% per year. We have selected our most promising stock in a portfolio, and we have outperformed the index for the last 1.5 months, also with 4%. Please subscribe to our channel if you want to see how our stock portfolio will develop further. You can also find our stock portfolio on the homepage of opugrow.com. Reason number 2 why we're unique is that we have clear explanations on why we believe these stocks will outperform. Each stock has an analysis page that structures and explains the key financial data. In the next video, I will talk you through one of these stock analyses. And the third reason is stock discovery. With our services, you can find information about well-known stocks, but also discover lesser-known and smaller stock companies. So for me it's simple. My choice would be to use Opugrow for your stock selection. Thank you for watching.